Hi, and welcome to Plant-Based Portfolio, where we explore all things related to investing and trading plant-based stocks. Whether you live a plant-based lifestyle or not, we help you put your money where your mouth is and invest healthily in companies that align with your values. In this video we will be breaking down the Oatly Q2 2021 earnings report. We will take a look at the quarterly performance compared with estimates, drill into the financial statements, and check the chart. Next, we will review leadership commentary, peruse forward guidance, and end with our final thoughts. Before we get started, go ahead and smash that like button to let the YouTube algorithm know that you like this kind of content, and subscribe and click the notification bell to make sure you catch the latest videos. Awesomeness. Let's jump into it. In Q2 2021, Oatly, ticker symbol OTLY, pulled in $146 million in revenue, just missing estimates by 1%. EPS came in at -11 cents, missing estimates by 10%. This is an example of good performance, and the market liked it, with shares rising 2% pre-market. Okay, let's take a look at the earnings report, starting with the highlights. Record revenue of $146 million, an increase of 53% year over year. Love to see strong revenue growth. Gross profit of $39 million with a decline in gross profit margin to 26% from 32% a year ago. Never great to see declining margins, which in this case is likely due to rising oat prices. But strong revenue in the face of declining gross margin means that customers are buying a ton of product, which is great news. Announced Fort Worth, Texas as the location of the company's third US-based manufacturing site, targeted to open in 2023. Okay, so new factories and distribution centers. Right off the bat they are pushing a positive growth narrative in that they are targeting the US. Additional capital investment in Singapore, with partnerships with McDonald's, Walmart, and KFC in China. Love the expansion push into Asia. Now let's look at the 6-month data revenue segmentation by region. We prefer 6-month data to 3-month data as it gives a more comprehensive view of long-term performance. So EMEA, which stands for Europe, Middle East, and Africa, accounts for the majority of revenue, about 69%, the Americas about 26%, and Asia only about 18%. Eliminations are the inter-segment revenue for products that were counted in more than one region. So this accounting trick allows them to over-report their segmental revenue. Not great to see Oatly use this. Would expect Asia to be the fastest growing segment, and it is. Asian revenue growth grew by 149% year over year, while Americas grew 65% and EMEA grew 32%. So it makes sense that Oatly is focusing on Asia and the Americas for future growth. We like that strategy. Okay, moving to the operating statement. Let's view 6-month data. Gross profit grew about 39% year over year, despite gross margins decreasing to 28% in 2021 from 32% in 2020. Here again we see the effect of inflation and rising oat prices. Looking at expenses, research and development costs jumped about 190%, while general and administrative costs rose around 135% year over year. Oatly is rapidly expanding, so the expenses are expected to rise in the near term. Net loss was $91 million, a worsening of year-over-year net loss of over 600%. Sheesh mech jeesh. Now for the balance sheet, which they call Statement of Financial Position. $1.7 billion is total assets, of which cash amounts to $524 million. Not a ton of debt. Seems like a pretty healthy balance sheet. Let's move down to the cash flow statement. Losses from operations amounted to $73 million and losses from purchasing property, plant, and equipment was $134 million. These capital expenditures, or CapEx, are being used for Oatly to build new factories and distribution centers. So the free cash flow is negative at about $207 million for 6 months of operation. Notably, the majority of this negative free cash flow is CapEx, which means they are one-time investment expenses. So it looks like Oatly is spending on the right things. So now let's go to hear what CEO Tony Peterson has to say. 2021 represents the most transformational year in our company's history with the completion of our successful IPO in May, which has provided us with the capital to fuel new production capacity globally as we scale our business across 3 continents to meet the robust consumer demand for our leading oat-based brand. We are incredibly proud of our global team's execution with strong growth in new and existing customers, the opening of 2 new facilities in Ogden, Utah and Singapore, as well as doubling production capacity at our facility in Vlissingen, Netherlands. Here Peterson is lauding the IPO, which raised about $1.4 billion to fund growth and expansion. Peterson also noted the challenges that lay ahead, saying, "We're continually expanding global production capacity to support our long-term growth and launching key partnerships and distribution agreements with prominent customers globally. We're excited about the addition of our second manufacturing facility in Asia, which remains on track to open in the second half of 2021. Providing a second new source of local production to the region. Our new and existing production capacity gives us confidence in our ability to achieve an accelerated revenue growth rate in the second half of this year, while also extending our core values and mission for a more sustainable food system." Peterson is confident that is good. As for guidance, we see that Oatly anticipates revenue to exceed $690 million for fiscal year 2021. So now the bar is set. To meet this goal, Oatly will have to achieve $404 million revenue in the second half of 2021. Can Oatly make this happen? Let's take a quick look at the chart before answering this. Jumping to the 1-year chart, we see that the price has been trending down from an all-time high of about $29 to a low of about $17, a drop of over 40%. The good news is that the price appears to be beginning to consolidate between $17 and $19. And with this earnings report as a catalyst, the stock could be forming a support. Final thoughts. Oatly's revenue growth this quarter has been tremendous. 53% revenue growth year over year for Q2. And Oatly is focused on investing in the markets with the fastest growth, Asia and the Americas. This indicates top-notch leadership, utilizing data to make informed and impactful decisions. The only area of caution is the declining gross margins, which are understandably out of leadership's control with rising inflation and oat prices. One way for Oatly to combat those challenges would be to control oat production by investing in farming and vertically integrating their businesses. So, can Oatly meet its second half 2021 goals? It definitely seems so. With strong product market fit and exponential growth, we are pretty bullish on the outlook. We will certainly be following Oatly closely for the remainder of the year. Many thanks for watching. We hope you enjoyed this video and found it informative. If so, please like, share, and comment below. We would love to hear your thoughts on Oatly, their earnings, and plant-based stocks. Please subscribe and join us in the next video. Don't forget to put your money where your mouth is, and invest healthily.